Finding yield is difficult. Sandy Pomeroy, a portfolio manager at Neuberger Berman, says look for stocks with dividend growth.
Skepticism so high on stocks right now. We are finding actually a lot of interesting companies that do pay dividends where we think the capacity to grow those dividends is very high. And that's actually one of the important things about our strategy. We're not just looking for a company that pays a high dividend today. What we're looking for is a company that can actually grow that dividend over time. And that comes from being able to grow earnings and free cash flow. And so those are the two things when we analyze companies that we focus on.
Sandy likes dividends because they prevent reinvestment risk for investors.
The dividend is a key thing. We look for sort of a minimum 4%-ish kind of yield. In some cases we might go to 3.5% when we're looking at a common stock that we think actually has the capacity to grow that dividend pretty well. But we look at the dividends being returned today as being something that takes away reinvestment risk, and it also is providing a solution for clients right now that need the income to fund daily expenses or to do other things, pay college tuitions, those kinds of things. If you are only focused on companies that are going to sort of grow earnings over time and cash flow over time and never return that income, what you're really doing is extending the duration of your investment. And we think by paying dividends today, you kind of reduce the duration of the investment, which we think actually has some appeal in this kind of market.
Neuberger's equity income funds components help to minimize volatility.
We don't manage to that concept specifically. What we do is we have sort of a unique portfolio construction where we have some of the portfolio invested in utilities, some invested in real estate investment trusts, some invested in convertible securities, and then some invested in just dividend-paying stocks. And by being super thorough in our research when we go to investigate companies, and we are very thorough in our buying discipline when we buy these companies, in the sense that we are always looking for low-risk entry points, we have been able to, through the portfolio construction process and also the buying discipline, be able to reduce the volatility a lot. In fact, I think our strategy is about 2/3 the volatility of the S&P 500. So it's actually been a great solution for people that are trying to limit the roller coaster ride.